What's up guys, we're back with another update for October. Guys, I am going to have to eat my hat. Last month I said that the UK property market had run out of its steroids over the past year and was slowing down, it was cooling down. The property market said, hey, hold my beer. And it came back roaring guys, in the month of October with 1.8% growth in a single month. To put that into context guys, the average growth over the last 10 years per year was 5.6%. So to come with 1.8% in a single month is absolutely astonishing guys. That is huge. And as you can see here, September last month, the monthly change was 0.3%. The month before that was minus 0.3%, which seemed to indicate at the time that the UK property market was cooling down, was normalizing, going towards a more stable position. But from September to October, it's blown through that. And again, just to put this into more context, guys, 1.8%, that is the highest growth in a month since October 2015. So this is the highest growth in 6 years.
Jesus Christ.
And as we'll come on to in a bit, we're going to see what's happening across the UK in all of the regions, what's driving this growth of 1.8%. It's crazy, guys. And let's quickly check a few headlines that are commentating on this growth in the UK property market in October. As we just said, biggest rise in 6 years, according to Yahoo Finance and according to the data. And in this article, we can see some explanation of what they seem to think is driving this jump in the month of October. Stock shortages, so shortages of the amount of houses to buy. We know that there was a shortage in stock of houses after the first lockdown, and corresponding with that, there was this search for space, as they call it. There was the stamp duty holiday, and later on in April of this year, there was the announcement of the 95% mortgage guarantee scheme. So those three factors supercharged demand of property in the UK. And when you have supercharged demand coupled with a lack of supply, lack of stock, you get growing house prices. And we saw correspondingly from March 2020, when the global health crisis began, to March 2021, house prices grew over 10% during a global lockdown and health crisis, guys. All of the so-called experts predicted the absolute opposite. They said house prices are going to fall, the market is going to suffer terribly, but the complete opposite happened. Message for you there, guys, just in terms of trusting the news and who you call your so-called experts. Always look at the data for yourself. Watch videos like these, do your own research, because that's the only real way to know what's happening in the market and to make educated predictions. So they're saying that fundamentals remain strong and there's an incentive for people to buy and fix their mortgage interest rate before a widely expected rise. What are they talking about there? So they're saying that the Bank of England is likely to increase its base rate soon. Let's have a quick look at the Bank of England base rate. It's basically been at 0.5% and below. We're currently at 0.1%. For the past 12 years, guys, 12 years at way below 1%. So as we saw in my economic update the other week, inflation is creeping upwards. And in order to combat inflation, what the Bank of England normally does is that they rise the base rate. Why? To make borrowing more expensive. Things like your mortgage, things like personal loans, credit cards, anything that you've got on finance leaves less money in your pocket at the end of each month. Spending cools down and inflation cools. So let's link that back to this article. What they're saying is that in anticipation of expected rate rise by the Bank of England, it's going to make mortgages more expensive. So people are smart, people will see this coming, and they're more likely to purchase a house now whilst it's cheaper, whilst they can get a cheaper mortgage rate, rather than waiting until after the Bank of England increases its base rate, which usually has a knock-on effect of making mortgage rates, in addition to other loans, more expensive. And just to flesh out what I said a bit more, guys, average stock per agent. This is the amount of homes that each agent on average in the UK has to sell. We're at 49. This is the lowest it's been for a year. And we know for the past year, demand has been surging during this period here. But the trend is that the actual supply is falling. So low supply versus high demand, and a good proxy of demand is the average time taken to secure a buyer. So in this scenario here, basically the less time that it takes to secure a buyer means that the higher demand there is. More people want properties, there's more people bidding on them, so properties sell faster. Again, we can see here that between September 2020 to now, the average time to secure a buyer has fallen. So demand is increasing, supply is falling, and that's led to a continuation in the growth of property prices across the UK. I gotta be honest guys, I did not expect to see 1.8% growth in October, especially what we saw in September and August. Let me know what you guys expected to see and if you're surprised too. I'd love to know your thoughts and comments. And then looking at this section of the table below, what is driving that? What are the types of properties that are driving that? It's the larger top of the ladder properties, guys. So these are the ballers who are looking for properties that are 5 bedrooms and above. Monthly change in those prices is the highest, 1.7%. Second steppers, 3 to 4 bedrooms, 1.4%. And first time buyers, 1-2 beds, 0.8% increase. And that fits in with the narrative that we know has continued throughout lockdown, guys. People have been searching for space during the global health crisis. People are wanting to move away from densely populated smaller houses to bigger houses in suburban areas that are usually cheaper, more space. You basically get more for your money when you buy outside of cities, generally speaking. So let's have a look at the average asking price in properties across the UK. This is really interesting. I mean, look at that. You can see this steep hike between September and October. You've got this hike from just below 340 grand to 345 grand. Imagine that. You're bidding on a property 1 month. You're looking at a property 1 month and it's say £339,000. A month later, it's £345,000. That's a big increase in the average price of a property from 1 month to another. And the types of people bidding and buying these properties, according to the data, these are proceedable buyers. What does proceedable buyers mean? These are people who have already sold their property that they're living in, if they're in a chain, and have the money to be able to make an offer and purchase straight away. They don't need to wait for their property to be sold, or they're cash buyers. Apparently that's 80% of the people who are bidding and buying properties right now. So these are strong, legit, highly desirable buyers. So if you're in a position where you are bidding on a property right now, you're likely going to be encountering high levels of competition from other bidders. And I'll give you an actual example. I had a friend who bid on a property. They bid a certain amount of money. However, they were waiting on their property that they lived in currently to be sold before they get the money to be able to buy their new property that they bid on. Well, they were in competition by another bidder who actually bid less than them, but they were not in a chain. And the seller went with the lower bids because they didn't want to deal with a chain. That's the kind of market that we're in right now, guys. Sellers are able to cherry pick the offers that come into them because there are high levels of competition and they're getting lots of options on the table. And in this particular example, the seller went with the buyer who's going to essentially complete fastest with as few complications and variables as possible. And also, guys, don't forget, we're in a hot market right now. So even though the bid that the seller went with was lower than the bid of my friend, we're in a market where prices are 10% up on last year. So for them, it was very likely still a very good bid regardless. And this graph here, guys, this is the same as the one above, except over a 5-year horizon. So we just saw average asking prices over the space of a year. We've gone from just under 325 to 345 in the course of a year. If we go back to the beginning of the global health crisis, which was round about here, where are we? We're just below £310,000. So from the start of the global health crisis to now, average prices have gone up by just under 40k across the UK. £40,000 across the UK in the space of 18 months. Isn't that something, guys? And again, tying this back to the beginning of the video when we're talking about monthly change in average asking prices, as we mentioned, over the course of the health crisis, prices have risen significantly. And this is all contained within these bars: 0.5%, 0.8%, 2%, 1.8%. All of this represents continued growth in the average price of properties over that period. Now, in my last video, what I saw, if we focus on these 3 bars here, you can see that there's a downward trend, guys. We've gone from 2.1% down to 0.8, 0.7, minus 0.3, and then 0.3. The UK property market tricked me, guys. I was convinced we were heading towards a leveling out of property prices. Then look at this sucker here. Boom. The market was like 0.3%. I ain't done yet. Boom. 1.8%. Who knows? I'm not going to make any more prediction, guys, but I'll be very interested to know what happens in November and December as we come towards the end of the year. Traditionally, the market cools down towards the end of the year, but it's been a crazy past 18 months, so who knows what's going to happen. Let me know what you think is going to happen in the comment section below. And now let's go to the regions. Now, I told you you're going to be very interested to see what's happened in the regions this month. So let's first take a look at last month. Now, what I want to draw your attention to is this map of the UK. The dark green regions represent the regions where there's been an increase in prices in this region over the last month, and the light green regions represent a decrease. So round about half and half. East of England, southeast, London, Wales, Scotland increases. Middle of the UK, the Midlands, northwest decreases month on month. Fast forward to this month, we have had increases in prices across the UK. This is what the Rightmove analysts call a full house, guys. I haven't seen this happen since 2007. Crazy. 14 years they haven't seen house prices, average house prices in all regions of the UK rise in a month. What do you think, guys? Is that a sign of continued strong growth, or are we peaking out now? Is this it? Is this it where we peak out, or are we going to see more? But then let's have a look at what's happened in these regions. So these are high numbers, guys, with the exception of the east of England, 0.1%. Almost let the side down, but just scraped in there with 0.1%. London, I'm surprised by London, 1.9%, because London has been struggling for quite some time now. Northwest, where my properties are, the highest, 2.3%. Wales is still going strong. A lot of good stuff happening in Wales, guys. Southwest, 1.9%. And then you can see what's happening in Scotland, Northeast, and Yorkshire and the Humber. So there is a wave of price growth sweeping the UK right now. And then lastly, let's look at some news. I love to take a look at the news. Really good article in the Times Money Mentor. So they're saying it's now a good time to buy a house in 2021. And I think they're along the right lines, guys. Yes, it is expensive right now, but I always say to people when they ask me when is the best time to buy a house, I say now, because over the long term, the property market rises. So if, for example, imagine this scenario, it's the beginning of the global health crisis, and you think you're smart and you're saying, I'm not going to buy a house now. I know, in quotation marks, that by the end of this pandemic, house prices are going to tank and I'm going to get a great deal once this health crisis is over. Fast forward to today, prices are over 10% higher than they were at the beginning. And no one could have predicted this, guys, but it fits into my overall long-term view that you should always buy now. Prices over the long term, they do not fall, they go upwards. And yes, the stamp duty holiday is over. Mortgage rates are, as they say here, very, very low. Yes, they may rise or are likely to rise soon, but relative to the last, 15, 20 years, let's say the Bank of England rises its base rate to 1% or even 2%, it's still going to be lower than it has been for over 12 years. Let's go out to the maximum view. In fact, for over 40 years, guys. Even if the Bank of England rose its rate to, let's say, 4%, again, it hasn't been that for over 40 years. So guys, what am I trying to say? It's better to buy now than to wait. And then further on in this article, will house prices fall in 2022? So they're suggesting some things that could lead to a fall in house prices. Let's start with the stamp duty holiday. Stamp duty holiday ended at the end of last month and we did not see a fall in prices. In fact, we've seen an increase in the past month. Interest rate rises, this usually has quite a significant effect on house prices. So let's see what happens, because if interest rates rise, it's going to make the cost of borrowing more expensive, but it depends on the margin by which, how much interest rates rise. Are we going to go from 0.1% to say 0.5% or even 1% or even 2%, guys? That's still historically incredibly low. So I am not convinced. I'm going to stick my neck out there. I did say earlier on that I'm not going to make any predictions, but I don't feel that the interest rate rise is going to have a huge effect on the market. Furlough scheme, I mean, that's been phased out slowly over the past few months anyway. So let's see what happens, guys. I'm going to hang my hat on. I'm going to be bold. A continued rise for the next 6 months at least. But let's see what happens. And then this is an interesting one. When is the best time of year to buy a house? So they say March is generally a good time to buy a house. And we've seen over my last almost 6 months of monthly updates, perception of the market, consumer confidence, the way people feel has a huge effect on their buying patterns. It's not necessarily about the hard numbers and the statistics and the logical aspects of the market. We are human beings, so how we feel has a huge effect on how we spend our money. So yeah, March, we're coming towards spring. In that time of year, days are longer, it's sunnier, people are in generally better moods, and buying a house is something that they're probably more likely to do during that period and over the summer period, of course. And as we alluded to earlier, purchases tend to drop off towards the end of the year. It's colder. People aren't really in the mood to go for viewings. It's darker. You know, most people can only go for viewings after work or the weekends. Christmas is a time when you tend to get cozy and snug. You want to stay in your house. You don't really want to move just before Christmas and New Year. And like, they summarize all of this by saying the worst times to sell tend to be August and December. Conversely, those must be very good times to buy because you'll probably be more likely to get a deal. So guys, that's this month's update. I hope you found it useful. Let me know your thoughts in the comment section below. Guys, follow me on Instagram, by the way. I post content on there regularly. I love to hear from you guys on there, and I'll see you guys soon.